Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic and wonderful day. Happy Taco Tuesday to you, if that is such a thing in your world. If you're in another country and you don't know what that is, it's just kind of something we have here in the States that is a fairly consistent sale price on Tuesdays. Some reason it just rhymes, and I think that's the reason for it. But either way you look at it, what we're looking at here is Bitcoin, not Taco Tuesday. What we want to talk about, oh hey, there's a joke. Talk about some interesting stuff here. So what we want to do, first of all, is take a quick peek at this descending trend. So to clarify, when we reviewed this last night, Bitcoin was looking like it wanted to sell off, and we have this bear pennant pattern on the 50-minute time frame. We opened a short at the $63,000 range, not for Bitcoin, but for ICP, as a matter of fact, because it had a bear flag as well. And basically in the green here so far. And I think we're due to see the price continue further down. I'm mentioning this because you see this pretty solid resistance at 63,000. There's a great chance that we're going to continue lower now that we've broken below that and we've lost our ascending trend line. Okay, so again, just give you perspective here. ICP has a pretty significant bear flag here and likely to continue lower. It's already broken free, so to speak. So again, a lot of that stuff, that's kind of how you trade altcoins, is just understanding how Bitcoin's working, and generally just that's the concept, right? So anyways, let's go ahead and check out the backend data here, see what's going on. So we'll go ahead and reload with some nice fresh data here, and we're gonna look at liquidation, open interest, kind of get a baseline what's going on the back end. So if you are new to the channel, you're not familiar with this is very helpful to understand greed and manipulation. In other words, where there's heavy concentrations of liquidation, those are basically people that are feeling confident it's going to go in that direction, if you will, or the opposite direction rather. And then of course the price comes down and just destroys your account here. Because again, most people that use high leverage, such as these folks here in the 61 to 62K range, they're about to have a bad day. It's a good chance we're going to see that. We've already tested it once at 61,900. You shouldn't be in a long right now, folks. There's no real reason for it. We've shifted momentum significantly. Okay, we zoom out a little bit. We can see here that between 60 and 59,000, this is just a rough estimate, kind of shooting from the hip here, we're probably in the $30 to $40 billion range. Okay, I'm not proposing we're going to see sub 60,000 just yet. There's a lot of things that need to happen between now and then, but we lose 62K. I think 61 is at least probable. And again, there's some key fib levels we want to talk about, but generally speaking, that's where we're at. We can see the delta has shifted here from what it was at one point. It was closer to 3 billion in longs. Now it's closer to roughly about 1 billion longs. In other words, this is the delta, just the aggregate, so to speak. We have more shorts than longs at this point, which makes sense because that momentum has since shifted. You just got to recognize though that when that delta becomes too high, then the reversal typically occurs. We do take a look at open interest last 7 days. We can see the most interest at about 61.5 as a rough estimate. I'd say between 61,000 and 61.5 is that area. So it would make sense for us to retest that level. It's really common for those areas to be retested. So now that we've kind of addressed that, or set the foundation or the baseline here for that, what we're looking at is the daily, and we're going to work our way down, kind of see what's up. With the moving averages, we talked about this yesterday. Losing the 20, or essentially not closing above the 20, is I wouldn't say it's a big problem, but it's definitely not a great thing. We want to be above that to give us some confirmation. The 200-day SMA is right there as well. So once more, as I mentioned before, closing above 63, 63.5 more specifically is what we need to have a small confirmation to get on the right side of tracks. Because again, 63,000 is that massive point of control. You can see how much this volume is essentially holding the price action down, okay? And that goes all the way back. If you look at the macro for the entire scenario here, ever since we've been in this range, 63,000 is the common denominator. It's like the most amount of volume we're seeing right here at this level. So that really implies that it's resistance until we can close above it. We've also got some macro points of control there too. So micro rather. No, in other words, the local range people are buying the most Bitcoin at 63,000. It just kind of implies that we have a resistance. Plus, 0.5 fib level, what do you know, big surprise, holding like a champ, at least the initial retest. Now, this isn't a guarantee the price is going to drop instantly from here. It just tells us that, hey, we're facing a significant amount of resistance, all right? We take a quick look here at some traditional indicators. RSI is still in good shape, but it's kind of hanging on by a thread. I don't like that very much. Money flow index being below it is problematic. It basically implies there's more money flowing out of this coin than people are aware of. So people feel it's a good value right now. Of course, 63K, that makes sense, but there's more money flowing away, essentially implying that there's more selling pressure and that the price is more likely to drop. So I don't really like it when the MFI drops below the RSI, specifically on the daily. That tells me that that's a bit of a problem, or it's kind of weak, if you will. We see a lot of weakness in Bitcoin right now. Same thing here as well. We can see this We saw this previous as well. In fact, one of my Twitter posts that went semi-viral, I wouldn't say 3,000 views is viral by any stretch, but generally speaking, we had a bearish rectangle at the time and the price broke down. It was previous here, it's this guy right here, and the price action essentially bounced off. We held 60,000. We're seeing the same thing right now. In other words, simple way to understand is we're working ourselves into a channel. We derived from the upside, and what I'll do is I'll draw that on the hourly time frame so you can see it better, and I'll obviously post a new playout chart on our Twitter, Telegram, and Discord. But I'm mentioning that because we're working ourselves into a channel, and the fact that we've legged down implies one more leg down makes sense, especially after rejecting off the local resistance at 63.1 or 63,000. We're now under the zero line here on the TSI, which is generally disadvantageous. MACD is diverging, of course. We've known this for a short while. At least I saw that last night before I went to bed. You may not know that, but you know now. And then, of course, RSI keeps getting rejected at 50, but MFI is bouncing. So we're seeing some buying pressure here, of course, with this last-ditch effort, but I don't know. The fact that we keep retesting this lower low here, this parallel low, that 62K range, we're probably going to drop, and it might drop kind of hard. We're probably going to see a chunk down to about 61.3 as a potential reality. So just know if the price does retrace and pull back, 61.3 is that next key fib level. My personal opinion, 0.236, 0.786, those are like the upper and lower outliers for Fibonacci. They're generally less favorable in trends like this. In other words, I don't even see 61.3 holding. What we might want to look at in general is what I generally like to look at is liquidation levels. And if you look here, it does kind of match up a little bit. 61 to 62,000, there's a bit of a gap between that. So I would say a wick all the way down to 61K makes some sense. But again, a little too early to tell. However, let's take a quick look at our hourly time frame and just extract that we are definitely shifting bearish. Okay, we broke below the cloud. We rejected off the lower lead of the cloud here where the price came up to try to retest that. That is also concurrent here with 63,000. And then, of course, the lag and span conversion line. Lag and span is free and clear, and this conversion line is way below the baseline. So we got tremendous momentum to the downside. We lost our ascending trend. There's no reason to be bullish on Bitcoin right now, folks. And I get the impulse to want to buy the dip because 62K seems like a good deal. I'm sure you said the same thing at 63,000 as well. And even I was talking about earlier, if we hold 63K, we're going to be in good shape. Well, I got news for you, folks. We didn't. We hit that pennant pattern on the way down, and it's been nonsense ever since. So again, this didn't happen because the pennant occurred, but you need to understand that bear pennants have they're not like a super high success rate, but there's a lot of other confirming factors, right? So the key takeaway here is that the price, when it comes from the upside, it keeps establishing lower highs and lower lows, and essentially tests that lower low too often and inevitably breaks. And you got to think about it this way. The bears and the bulls are trying to buy and sell, and inevitably one's going to have to give up and concede to the other. And that's essentially what happened. The bulls are like, okay, we don't have enough buying pressure. That's why the price wicks down aggressively like it did, because the bulls basically just gave up, if you will. And they're obviously giving up right now too. I think we're going to see the price probably run, I'm going to just ballpark, the low 61K range for the moment. We could see a lot lower, of course. There's a lot of liquidation actually at this 57 to 58K range. So if we get closer to 60K to retest that level, I'm going to be setting some limit orders in the 57 to 59K range. Again, those are more spot bag scenarios. I don't just open leverage trades in the blind. You should never do that. Okay, so that's kind of what we've got there. Last thing I just want to kind of show here, it's probably a little easier to paint out on the 4-hour time frame just so you kind of understand. And I'll post this on our playout chart too. But generally speaking, this is what a bearish rectangle looks like. And the easy way to understand it is that we keep retesting the upper and lower range, and it has a tendency of breaking down. So that's kind of what we're looking at there. If you're not familiar with it, we have chart patterns here in our Discord, kind of easy references, and bearish rectangle, that's kind of what we're looking at here. Again, it retests that lower low consistently and inevitably breaks. So I think we're due to see a continuation of lower here. All right, folks, I hope this makes sense. I described this correctly. Thanks so much again for watching and the awesome support. Never forget to hit the like button on every single video you watch of mine. I greatly appreciate that. We will look forward to seeing the next one. You do want to become a better trader. CryptoCash.tech is the site. Do not forget to join us over here at BitUnix. They have an awesome deposit bonus. What, $1,000 deposit, you get $200 futures. That's not too bad. These guys are awesome and taking great care of us. If you use my link to register, you'll get that option. If you've used my link to register in the past, you'll have that option regardless. Okay, so just keep in mind that is an option for you. I hope you have a good one. Thanks again so much for your time. We'll see you the next one. Take care.